Hello guys. I was just about to have breakfast and decided to check in real quick and then do this quick video. So of course, the video is a follow-up to what we have been talking about for a while, and that is the USD index, the DXY. And we would start from the daily time frame perspective. It's always good to know what's happening from the higher time frame perspective for directional bias. It's going to help us. So once you have the directional bias in check, it will help you to know your potential entry point. We also call them areas of interest. And of course, you have to wait for the reaction to those areas. So for a while now, we've been talking about this from the daily D1 time frame. We've also had the Fibonacci drawn in this manner. And price came back to this area, which was a good 50 to 61.8 when it was this high. Now we have it at this high, right? Because obviously price has broken out from this resistance, which we can now see acting as support. But from the daily time frame perspective, I was not so eager to jump into this. Now I'm going to say this, and please listen to this carefully, because even though from the daily time frame perspective, you don't really like the area as such, it does not mean that you cannot still take a trade. And I'm going to explain now. So this is the daily, right? This area here from the daily, which is the 100.48, or let's just say 100.50 flip zone area. Flip zone area is an area that has acted as support and resistance in the past. Now, I was also keen on entry here from D1 because I wanted it to have a confluence with Fibonacci levels of 38.2, 50, or 61.8, which simply meant that I wanted it to at least drop further down in this manner. And of course, we have this area here as a form of demand or flip zone. If you look to the left-hand side, you can draw a horizontal line across there and then you can see it properly. Now, I have trained my eyes to see levels without even drawing anything on the chart, right? So I would have preferred price to come all the way down here. And if that's going to be the case, it's going to take a while from the daily time frame perspective. It might take weeks or maybe even months. But does that mean that we should not place any trade for weeks or for months? No. So what we could easily do, because we're looking at this 100.50 area here, what we could simply do is to drop down to a lower time frame, and that is of course on the USD index, right? So this is the USD index, and this is my what I'm paying attention to for this week. For this week, because I want it to push higher, right? Push higher back to the highs there of like 101.56. So this week, this is the 101.56, so this is the 101.50 here, as you can see. So this is an area of resistance for the year. But because I wanted to push higher to that point here, I have dropped down to the hourly time frame. And then what I would like to see here is, as you can see, prices gradually breaking out of this area here of resistance. So that means that here should act as support. So I would like to see a better push up and a pull back to this area and then hold as support and push higher. Now, that is one thing I would like to see here from this support area here. As you can see, prices it's struggling quite all right, but it is still above that area of resistance, which is the support area. So you could say maybe this is a false breakout from this reaction. We have not had like a clean breakout. But then from what I'm drawing here, I'm just gonna, my hand might not be that straight, obviously. That was a bump over here, but you can see what I'm trying to say. Over here, you can see some areas of reaction here, some areas of reaction here, some areas of reaction here, like support, resistance. You can see some little resistance here, some support here. That simply means what? I would like price to also drop down to this area. This would be my last area of demand for this week in order to get in and then push higher to 101.50, right? So this would be a lovely area for me for this week, simply because my directional bias is bullish. I would like to see a test of 101.50, right? And this is on the D1 perspective. But don't forget the D1 perspective, I would even like a further drop to the 38.2, at least to the 38.2 Fibonacci from that D1 time frame perspective, because it also has confluence over there, right? But we're not going to wait for days or weeks or months from the D1 perspective. So we drop down to the lower time frame, the hourly, and then we look for something happening here of the support or here the demand area. You can see I'm interchangeably using support and demand. Support and demand, in a nutshell, are areas where you find buying pressure, right? But I'm calling one support and one demand because at the end of the day, they are seen differently. There has been a lot of debate from support resistance and supply demand traders. But trust me, you can marry the two together. You can merge the two together. You could easily say that demand could be like the origin for when the buying took place, and supply could be the origin from where selling took place, or whatever, or however you want to coin it or look at it. But they're slightly different, trust me, right? Some could even say that the demand is just simply another area of support, whatever the case might be. As long as you are seeing these areas and as long as price is reacting to these areas, that is what simply matters. So if we're looking forward to buying on this USD index, of course, you know my point of view for the Euro USD, and that will be selling. You can see now it looks like it is pulling back above this area here, which is supposed to act as what? As resistance, but it seems to be pushing higher. And if you look in between, just like what we did for the USD index for the hourly time frame, this is also hourly time frame for Euro USD. Looking over here, I'm just going to do some markings here. You can see some areas of here acted as resistance, here as support. You can see a bunch of resistance over here, right? Even though I'm not drawing a straight line, but you can see as I'm drawing them in dashes, they are also as straight as possible, right? So you can see some reactions in this area here, resistance, 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 and whatnot. So that means price pulling back to this area will be my last line of defense for the sellers. This is where I like to enter as a seller and take it all the way back to the lows of this year over here, right? So I haven't gotten any trade this week, and this is how I trade. I don't rush. I wait for price to come to the best of the best of the best areas of interest for me, and then I do what? I go all in. When I say all in, I don't mean I'm betting a house, right? I could bet something tangible, meaning that I'm not just betting 1% or 2%. It could be something tangible because it is worth the wait, and because I have seen that area, especially when I get the reaction, apart from the area, like I would say the act of trading, apart from the area, I also wait to see the reaction at that area of interest. And then we wait for our trigger to enter the market. Your trigger could simply be, it could be a price action candle, it could be a pin bar, hammer, engulfing, doji, whatever the case might be. It could be a chart pattern, it could be maybe a triangle heading to that area of interest. It could be a pennant, it could be a flag, or whatever the case might be. And you might even see this on a lower time frame. Even though we're looking at this at 1 hour, trust me, if you drop down to like 15 minutes or 5 minutes, you might see a clear chart pattern heading towards this area here that we've called our supply. Whatever the case might be, you need to be a bit flexible, right? Test and try out a lot of different ways and then start to weed out, right? This was something that, I listened to Bruce Lee because I've been listening to a lot of, different stuff, Bruce Lee and the likes, apart from Bruce Lee's famous line of be like water, or or any of those famous memes or lines or whatever. Think about it. As a trader, you've been trading for years, you've learned a whole lot of, different strategies, different ways to, play around your stop loss, take profit, manage your trades. What you should be doing now is not just giving up, but is to be weeding out. Weed out those things that were not making sense and then keep the ones, right? Because that's what I did for years. I learned so many things. I learned Elliott waves. Well, I didn't learn the ICT, SMCs. I didn't get to that point yet because I got satisfied with what I'm using now support, resistance, supply, demand, a bit of Fibonacci, a bit of this and that because I see everything on the chart, right? But what I'm trying to say is after you've learned like 300 strategies or 1,000 strategies, start to weed out, start to reduce, and start to stick to the ones that, over the test of time, they have been proven to work over and over and over again, right? So with that said, this is what I'm looking at for Euro USD. I'm looking forward to being a seller. If price gets to this area of supply, I would jump in based on the reaction and based on my trigger, and we'll see how that goes. Okay, guys, as usual, trade safely. Check the calendar for high impact news that could cause some volatility. And of course, I believe ceasefire is no more for US and Iran. That should make the crude oil to spike. That should make things become a bit more volatile and whatnot. Okay, so let's see how the market plays out over the next given hours to days. I would say Thursday, Friday as well. Okay, thank you guys. Trade safely and cheers for now. Bye.